So let's get some further analysis on reporting season and some of those aforementioned companies. Harry Watt from Shaw & Partners and Market Matters joins us now. Harry, good morning to you. Hey, look, Aussie Broadband, I spoke with the CEO earlier, just talking about strong margins and margin expansion as it continues to grow its enterprise customer base, but still, downgrading on revenue while upgrading on earnings. What do you make of it?
Good morning, Nadine. Yes, it's a pretty interesting result out from Aussie Broadband this morning, just a half year from these guys. I was actually really impressed. It's all about how these EBITDA margins move forward. They went out and bought Over the Wire last year, and that gave them a big leg up in terms of business access there, and that's really proven that that's driving margins higher here. You did say revenue guidance was downgraded, but all in all, I think EBITDA is the main thing that we should be looking at in this business, and that's on the improve with margins going higher from here. Numbers really solid. I think their outlook's really solid. I think they've also got another free kick coming from the NBN. We should hear about some new pricing measures coming in there. Bit of rationalisation in the telco space is what we've needed for some time. I think we're starting to get that. The NBN's getting on board. Telstra's increasing prices. They're basically increasing prices across the board with a number of companies in the space, and that's leading to better margins, and Aussie Broadband's benefiting from that. And they're leading the way in terms of business connections and wholesale and a whole bunch of areas that they're doing well within their own business as well, Nadine.
Yeah, okay, so ABB, you're giving it the tick of approval. Share price is down by 4% today. Look, let's talk about Praemium. So PPS is the ticker code for those of you following along at home. Share price is up by 11% today. Did you like this result?
I definitely like this one result. Once again, it's a margin story for Praemium. We saw their competitor Hub come out last week, and their cost control was really good. We really wanted to see the same sort of thing from Praemium, and we've been given that today. Really solid result from the investment platform guys there. It was a beat basically across the board for Praemium today. I think that we've really struggled to see the last few years. You go back 5 years ago, these guys were getting really good money in the door. We sort of started to see those fund flows slow, and we started to see pressure from the market to talk about profits going forward. It's all well and good talking about what's going to happen in the next 10 years, but the market wanted to see profits now, and they've seen that they can control costs pretty well, and seeing that revenue margin increase as well is another big tick for Praemium today. So margins across the board up. I think that one looks pretty good moving forward. The investment platform managers, if they can see these fund flows turn around again and sort of accelerate through the end of 2023, we'll probably see these guys re-rate higher again. Praemium's the cheapest of the lot as well, so we really like that stock to begin with, Nadine.
Okay, so there you go. Let's get to Linus. Because again, the market is not treating this result very well at all, down by about 2.4%. What is it? Is it just the ongoing uncertainty around its Malaysian operations? Because you would think Linus has everything going for it. It's got government support here and in the United States. It's actually producing. And, the market, we're told, for rare earths is pretty strong.
It really is today. I think, well, Linus is the biggest ex-China rare earths producer in the world, and they've done pretty well in terms of setting themselves up to be a solid performer moving forward. They've got that US government support. They're building a facility in Kalgoorlie in WA. There are some issues around that Malaysian rare earths facility they've got. They're cracking and leaching issues there. But I think the market really understands that pretty well. So, more uncertainty there shouldn't be a big problem. And they've sort of got a lot of measures in place to sort of work through those issues and come out the other end.